Now, high interest rates, meanwhile, continue to haunt India Inc. as the annual default rate for corporates has jumped to a 10-year high. This, of course, hampers banks' asset qualities, in turn really impacting fourth quarter earnings.
Bankers on their part, however, expect the situation to improve by the second half of the current financial year. Simran Gill and Anirudh Ghosh get you the story.
Bad loans continue to mount as corporate India's repayment capacity hits its lowest level in over a decade.
Credit quality has been under pressure throughout 2011-12, and we had begun highlighting this as early as April 2011. And the aspects that have led to this weakening of credit quality and substantial increase in default rate essentially are three factors that we have always been highlighting. It is just that the intensity of these pressures has continued and has actually accelerated.
India Inc. annual default rate has risen to a 10-year high of 3.4% in FY12 as compared to under 3% for the last 10 years. High interest rates, commodity prices and liquidity pressure have intensified the problems for corporates. Not surprisingly, asset quality across the banking sector has plummeted. Bankers, though, remain optimistic.
I think the NPA levels already look to have peaked out. So we seem to be winning the war against NPA.
I therefore don't think that the asset quality could be a major concern as we move along. At the same time, one would expect the economy to bounce back, and with that the overall situation is likely to improve. Therefore, current fiscal 12-13 could be better than what it was last year.
With banks set to declare their annual results from next week, analysts are expecting NPAs to rise across the board. Clearly, what both bankers and corporates are hoping for now is some relaxation from the central bank in its policy statement next week. Simran Gill and Anirudh Ghosh, ET Now, Mumbai.